Irish house prices are 7% below their long-term average, according to the IMF. Not a huge surprise when you consider that transactions here are still lagging well behind neighbouring countries. The property consultant Savills have concluded a study on the housing market, and Director of Research John McCartney is here now. And John, we've seen something of a recovery in the housing market, but it's mainly in urban centres like Dublin, for example, particularly surging ahead. Where are we now compared to where we should be in a normally functioning market?
Yes, well, to put it in perspective, housing transactions increased by 34%, so up about a third between Q1 of 2013 and Q1 of this year. But what's really interesting is to look at how many transactions we're having on a per capita basis compared with some neighbouring countries. In Scotland, for example, the population is just about 15% greater than the population of Ireland, and yet they had nearly 3 times as many housing transactions in Scotland in Q1 as we did in Ireland. So we're still well below international norms in terms of the transactional activity in the market.
A feature of the housing market that emerged in recent years was the cash buyer. How much, what proportion of the market is that individual accounting for now?
Yes, well, that's interesting. Last year in Q1, cash buyers accounted for about 63% of all housing transactions. Now, over the last 12 months, that figure has retreated a little bit. It's down to about 52%. But the fact of the matter remains that more than half of all housing transactions are cash funded in their entirety.
Are these first-time buyers? Are they owner-occupiers? Or are they people looking for rental properties to rent out?
Well, this is actually where it gets really interesting. 12 months ago, about 2/3 of cash transactions were accounted for by what we would normally consider to be owner-occupiers. That is, first-time buyers, people trading up in the market, and people downsizing. Roll the clock forward 12 months, and that has subsided to about 30%. And who has made up the difference? Well, it's primarily investors and also, to a lesser extent, developers.
Might we expect to see that trend to continue now, a surge in people getting mortgages now that the banks are getting back to lending again?
Yes, well, I think that is happening. I mean, we saw that mortgage drawdowns in terms of value were up over 70% in Q1 of this year compared with last year. And that mortgage lending has been skewed particularly towards first-time buyers. And we see that the number of first-time buyers that are purchasing with cash has fallen away completely, really. So they're getting the mortgages, and that can only be good for the return of a more normalised market, I think.
OK, John McCartney of Savills, thank you very much indeed.
Pleasure.